This book, Thinking in Bets, cost less than $14 on Amazon and changed the way I thought about trading forever. So Annie Duke is an ex-professional poker player, and it talks through the different ways we can improve our decision making in uncertain environments. There are 5 main concepts covered in this book. The first one is life resembles poker and not chess, resulting, thinking in bets, truth-seeking pods, and mental time travel. So in this video, I will be covering the top 3 because they are super relevant to algorithmic trading. Hi, if we haven't met, I am Lisa, a data scientist turned algorithmic trader, and I've been trading exclusively with robots since 2022, and my public live track record is on DarwinX Zero, where anyone can check it at any time. And I also run a community where I share my robots, my experience, and the process in the Algo Lab. The first concept of the book is that life resembles poker and not chess. So in chess, there are a limited number of pieces, and there are also rules about where each piece can move, and therefore a limited number of possible moves. And all the information is available in plain sight. You're not going to get a random Lego piece appear out of nowhere and kill the king. In poker, on the other hand, there's hidden information because you can't see everyone's cards, and that's where you need to think in probabilities. So this is the exact same situation when it comes to trading. We don't know what the other players are in the market and what they will do. We don't know if the price is going to go up or down, or how far they are going to go. And so traders also need to think in probabilities. The second concept is resulting. So we humans, we usually judge a decision based on its outcome instead of the quality of the decision-making process. A good decision can have a bad outcome, and a bad decision can have a good outcome. To illustrate this point, I am going to point out the flaws in my own trading account. So this is my LFY account in DarwinX Zero, and there are 2 points I want to highlight in this chart. The first point is where I implemented version 1.0 of my process. Now, my goal at the time was to get DarwinX allocation, and if you're not familiar with DarwinX, they're a company that rewards good traders with funded allocation, and they allow investors to invest in your trading account. So at the time, I was in DarwinX Silver. So the formula to get allocation is to reach a certain percentage profit in your account. So I would place the robots on my trading account, and when it reached a certain profit amount, I would stop trading for the month to lock in that funding in DarwinX. And that's where you see these flat periods. And I did this for 7 months, and I got funding for 6 of those months. Pretty impressive, and I was really happy with my progress. However, there was a huge flaw in my plan. I was in reality capping my potential profits and opening up to unlimited losses. So instead of getting as much profits as I could, I was stopping trading, sometimes at 1% profits only. These were the good times in my trading strategy. The market was moving really well for my algos, but I was not making the most of the good times. And then I managed to achieve DarwinX Gold at the second point in the chart. Unluckily for me, the good times were now over. The market started changing and my strategies weren't doing so well, which in the grand scheme of things wouldn't be that bad because I was trading with a fixed stop loss and a take profit, and I was only risking small amounts of my capital. However, because I had capped my trading profits when the times were good, when the times were bad, the losses turned out much bigger than the profits. So I went from 29.8% down to 10% profit. So let's apply the concept of resulting to my own actions. So my action of capping my potential profits was a bad decision. The outcome was good because I still made 26% profits. However, this does not make it a good decision. It was a bad decision. At the time, it felt like I was making a good decision because the outcome was profitable and 6 months of DarwinX funding was pretty good. But if the goal is to make decisions based on data and logic and probability, it was a bad decision. So if I didn't interfere, I might have more profits than I currently do right now. So when evaluating a decision, look at the process and the quality of the decision, not the outcome. And the book also gives some really good examples of resulting. This is my own interpretation and translated into trading terms. You've seen in my own trading, I have made mistakes, but despite all that, I've still managed to get 330K in a funded allocation from DarwinX, and I've received multiple payouts from them. And you're probably a much better trader than me. So if you want to sign up to DarwinX Zero, I have a discount link below. The third concept is thinking in bets. Basically, every time you make a decision, think of it as a bet with a probability of success and a probability of failure. You can simplify this as what if. So too many traders take huge risks on their account, trying to double or triple their account in a short amount of time. They'll think, if I risk 50%, then I can double my account in 2 trades. However, what if the opposite was true? What if you risk 50% of your account? You have 2 losers and now you've lost 75% of your account. So from 75% down, it is so very hard to get back to 100%. So when making a decision, play out the scenario. What if you win and what if you lose? You're probably thinking at this stage, well, I don't need to buy the book now because you've just told me about what it's all about. Trading is a game of probability. Okay, move along. Let me tell you why you would want to buy an actual book and not just get the summary of the internet or ChatGPT. So this is a picture of the different levels and the depth of your mind. You've got the top layer, which is your consciousness, and at the bottom layer is your subconscious or your core beliefs. When someone tells you a fact once, you listen to it, but it just bounces off your brain. You are thinking about that concept in the moment, but it doesn't go any deeper. If you want to implement what you've learned in your everyday decision making, it takes effort to consciously make that decision. And most of the time when you react, it doesn't occur. So to get the message deeper into your subconscious and your core belief, you need to hear the same message at least 6 to 9 times until it is embedded and stuck there, becoming part of you forever. That's why I buy most books, even though most of them can be summarized in 1 sentence or 1 paragraph. By reading or listening to the book, the lessons go deeper than just surface level. I'd like to thank one of my Algo Lab community members for the book recommendation. You know who you are. Now, the strategies I've been using have been developed with a system that I have been fine-tuning for the past 2 years, and a big part of it involves robustness testing. So if you want to learn more about robustness testing, then watch this video right here. Thanks for watching. Bye.